Welcome back to Business Days. We just told you moments ago we have that the French finance minister has come out and confirmed that France will be losing its AAA rating from S&P. Now we're just waiting for S&P to come out and actually give us the details again. And we're not just waiting on a French downgrade. We are waiting to see what's going to happen with other countries. The rumor, Austria, Belgium, France, Italy, Portugal, and Spain.
Slovakia.
Thank you.
A+ rating, and the rumor is they're going to lose it.
There you go. So we're waiting to see what's going to be happening. We've got a currency specialist joining us, Kathy Lee, Director with Global Research Analysis with GFT Forex, joining us from the ICE studio. Kathy, great to have you with us. First off, again, we've got confirmation now. The French finance minister is saying, yes, we've lost our AAA rating. This has been priced in. What more do you want to hear on the French side of things in terms of outlook, or what more do you expect to hear on this?
I think that at this point, everyone's just holding their breath, waiting for the inevitable announcement from S&P. At this point, I think France is ground zero for the European crisis, and all the French can do is produce some type of plan in terms of, bringing down their debt levels as well as more austerity. For France, this is not as big of a deal, I would think, as it is for the Eurozone and the European Financial Stability Facility. Because right now, France has yields of about 3%. That's their 10-year bond yield. That's not that low, but it's not that high either. So one of the greatest consequences of a downgrade is higher borrowing costs. They can afford to pay a bit more, but for the rest of the region and the EFSF, this spells big trouble. Okay,
let's spell that out then, if you would. So if, and I was reading your note from today, if France loses its AAA status, then only, let's say, what, half, more, about 2/3 of the money going to the EFSF actually comes from a AAA country, Germany. So EFSF's costs go up, and then what does that mean for the people who need that money?
Well, right now, the EFSF has a AAA rating, and it only has a AAA rating because the two largest countries, which constitute 80% of the AAA contributions, are Germany and France. So if France loses its AAA rating, it's almost natural for the EFSF to lose its rating as well. So what that means is that either Germany will have to come up with more money for the EFSF, which they probably won't do willingly, or they have to eat the lower rating. And the second scenario seems the more likely one. So what that leads to is higher borrowing costs, higher lending rates for the EFSF, and that will naturally be passed over to the troubled nations that are tapping into the facility.
Kathy, it's David Prince, and the question I have for you isn't the same rhetoric that we heard when the U.S. were going to have their downgrade, and in particular how everybody was running around the skies falling back in August. And what I find interesting, of course, the U.S. went on to fund its debt at the lowest rate ever and has been continuing to do that. All this rhetoric about Europe, does it not make you think that it certainly advantages the U.S. to get their own troubles in order?
Well, I think that there's two separate questions here. In terms of whether, the sky is going to fall down in the same sort of fear that we had during the U.S. Debt crisis, I think that we're in a very different scenario because this downgrade by France will have a far more significant impact on the euro than the U.S.'s downgrade because for the U.S. Treasuries are looked at as one of the safest investments in the world. But unfortunately, German and French bonds are not perceived the same way by investors. And that's why when there's uncertainty and concerns, people are not going to be flocking into euros. They're going to be flocking into, like they were flocking to U.S. dollars when the European sovereign debt crisis kind of escalated. So I think we're in a very different scenario, and that's why this is a much bigger deal for the euro dollar than U.S. downgrade was for the U.S. dollar. Now, in terms of whether this is kind of a wake-up call for the U.S. and it tells them they better get their own house in order, I think absolutely, and that's kind of why Obama made these recent announcements about putting the debt ceiling hike back on the table.
Kathy, the word or the rumor is that Germany is going to keep its AAA rating. What are your thoughts on that? I mean, is there any chance, do you think, that Germany could even lose it? That presumably would be a big shock.
I think right now the AAA rating for Germany is safe. I mean, that's what we heard from rating agencies recently, and I think that that's not going to change in the near future. France had a lot more to lose in terms of their burden in the overall crisis, and I think that right now the ground zero is in France, and Germany is the soundest and the only harbor safety for the Eurozone.
Well, a couple more questions for you. I guess, how much are you going to be watching the outlooks? I mean, if France gets downgraded, or well, they are downgraded, but it's still it becomes a stable outlook, is that going to be comforting? And if it continues to have a negative outlook, what impact would that have?
Well, there's a couple of cold comfort points. I mean, number one, we're hoping that the downgrade will only be one notch, not two notches, like S&P had warned back in December. So that will, if it's only one notch, it'll be slightly cold comfort for the euro. And then at the same time, if they go to a stable outlook, which is possible, if they do a two-notch downgrade, less likely to do a one-notch downgrade, that would also be a bit of a relief. But it won't be enough. I think that the possibility of further downgrades in the Eurozone remain a very, very significant risk this year. And so I think, we have very little chance of seeing any type of relief rally in the Eurodollar.
Tell us about Italy. Excuse me. Italy could be looking at a two-notch downgrade. What would that mean?
It's just more trouble for the euro. I mean, at this point, I think that
in terms of the net euro short position from the CFTC, the latest update, it has increased 9% to $24.8 billion, the largest net euro short position since at least 2007.
Be downgraded. If they're down at the same time, the move occur faster. If they're downgraded later, that would occur later. But either way, I think that the Eurodollar is headed towards 123 and then possibly even 120.
Kathy, my question refers to the American earnings. How much do you think this is going to affect if the euro continues to decline? A great deal of the earnings growth last year, a lot of it for the internationals was directed because of the currency improvement. Do you see that hurting the inflows into the United States from earnings in terms of the S&P companies?
Very good question. Currency fluctuation.
So further currency news from the CFTC, the net yen long position is now at $9.7 billion, an increase of 5%, whereas the net Swiss franc short position has decreased 4% to $1.6 billion.
And then two, from just slower growth in Europe as well as other parts of the world. So I think that you are going to see a greater chance of earnings disappointments than surprises as a result of this crisis and this fresh problems.
Kathy Lean, always a pleasure having you with us. Thanks so much.
Always a pleasure.
Kathy Lean, Director of Global Research.
Also for the net US dollar long position, that has increased a